Yo, what's up, guys? Welcome back to the $500 Robinhood Challenge. I'm T Fade, and I just thought I would give you guys a little update, a little daily update on what we got going on. As you can see, we're getting crushed. It's not a good thing, but I had to make some adjustments this morning. That's why I decided to go ahead and make an update video. So, as you can see, we were down pretty good this morning. That's I mean, in the grand scheme of things, $100 it is a lot of money, but it's not really a lot of money. But for a $500 portfolio, it's pretty serious to be down $100 and something dollars. So what I did this morning was yesterday we were talking about iron condors, and I think in a video that I was making and didn't publish, what I did was I was putting together what's known as an iron butterfly, and I guess it went through. So yesterday, after I made the video, we actually ended up getting filled on an iron butterfly. So that's what you see right here. This Walgreens that we were looking at yesterday, we were trying to buy an iron condor in Walgreens yesterday. And it says, you can see right there, it says it's an iron condor, but it's actually an iron butterfly. So here, I'll show you what the difference is. So here's Walgreens, and this is the chart that we were looking at yesterday, if you remember. And we were talking about the 5750, which is right here, and the 5950 or the 60, I think we were looking at yesterday. So we wanted to buy this range and bracket the price between 57.50 and 60, I think we were looking at. But what wound up happening, we got filled on an iron butterfly. And an iron butterfly, the difference between the two is you have much shorter, you have a much smaller range of prices. So we got filled on the 59 and the 5950 iron butterfly, which is these two red horizontal lines here. As you can see, it's a much smaller range that it has to expire within. And the reason you'll do this, a butterfly versus a condor, is the profit potential is higher, but like I said, it's gambling. It's a little bit riskier. So just to show you the difference here. So this is the iron condor picture that I put up yesterday. As you can see, this max profit up here, this whole thing, this table up here is your max profit. And you can see these are the strike prices that you would use right here. So this would be your put price, and this would be your call price. So this would be our 57.50 that we were talking about, and this would be the 60 or 60.50 right there. And then the max profit is if it expires anywhere between those two. And then the break-even points are a little further out, depending on how much premium we collected for those. So how much we got in our account for selling that. Well, that's distracting, showing the OBS. Sorry about that. Let's make this bigger. There we go. Okay, does that make sense? So this is an iron condor. You can see it has a nice wide strike prices, and you can make max profit in a pretty wide range from your call, where you sell the call debit spread and you sell the put debit spread. So we get credit spreads. Jesus. Yeah, so sell the debit credit spread, sell a credit spread, max profit all the way across here, and these are your break-even points. And these arrows down here, I hate this graph, by the way. I hate these graphs because they didn't make sense to me when I was trying to figure this stuff out, and hopefully it makes sense to y'all. The x-axis here is the stock price. So this is a lower price to the left, and this is a higher price to the right. If that makes sense. And then the profit is the y-axis. So the loss would be obviously below here. So this is your max loss, and it's called a condor because it looks like a bird, I guess. I don't know. So anyway, this is what we were trying to do yesterday. Long story short, we were trying to put together a $57.50 and a $60 iron condor. What happened was we actually got filled on an iron butterfly. And disregard these prices at the bottom. It's just a random Google image. So you can see here the max profit is higher, but see how it comes to a point, and the break evens are pushed in, and then the profit goes higher, like makes a point. And so you can make more money on an iron butterfly, but you have a much smaller window of profit, which is I was just trying to give you guys an example, but apparently we got filled. So yeah, we're kind of hoping Walgreens does its thing. So like I said, this was supposed to be our iron condor, but we got filled on the butterfly here. Anyway, so back over here to our portfolio, and you can see we're not doing badly. But to hedge our bet, I just bought a put on Walgreens this morning. We bought a $58 put just to hedge our bet, sort of doubling up on our butterfly there. What else did we get? Disney's crushing us, but this is a good thing about selling credit spreads is we have time for this to expire. And on that note, because Disney was low this morning, I went ahead and bought a debit spread. We haven't talked about debit spreads yet, but debit spreads are just like credit spreads, except you pay for it. You don't get money as a credit, you pay money as a debit. And why would you want to do this? You would want to do this if the underlying is more expensive than you have. And we have a small account, relatively small account, so we don't have a ton of cash on hand to just buy a Disney call. So if we wanted to buy a Disney call, this would cost us $143 just to buy the $149 call. But what we did was we bought a debit spread, and it only cost us $46. So to set up a debit spread, what you do is you buy the call you want, and then you sell the one a little further out of the money. So it's exactly opposite of a credit spread. Where a credit spread is we would sell the one closer to the money and then buy the one a little farther out of the money, and that would result in a credit in our account. But this is a debit spread. You can see here Robinhood knows it's a debit spread. This is going to cost us money, so we don't want to do this. And just to illustrate this, where'd we go? So this is a debit spread, and this is another of those graphs that I hate. So this is the price. So the x-axis is the price of the underlying, and you can see max profit. That's the thing about a spread, is your profit is defined and your risk is defined. Whereas if you just bought a regular call, your profit is pretty much undefined. So it's not unlimited per se, but it's defined. Undefined, and then your risk is also defined because you paid whatever you paid for it, $10, $20, $40. So that's the most you can lose. So the only reason you'd really want to do this is if you wanted to go long on something, an underlying that you didn't have enough money for to buy outright, but you had it's a really directional play. You really want it, you need it to go one way or the other. And so this is a debit spread. If we look at a credit spread, max profit and loss looks pretty similar, right? Looks pretty similar. The profits and losses are defined again, But the difference here is we got money for this, and theta, which is time, is on our side. We don't need the price to go anywhere as long as it doesn't go the wrong way. All right, so that's what we did. We bought us a Disney call debit spread. What else did we do? We also bought an AMD call because AMD took a ride this morning, and I just have a feeling it's headed back up. So you can see here it's been on a decline. So we just wanted to get some action on AMD, and it's doing well. And that one's at 12.20. So we have some time. One more thing I wanted to touch on before I let you guys go is these calls that we bought like the first day, like this AT&T call. This is a really good example of how time works against you as a buyer and works for you as a seller. You can see here this call has just been losing value over time. It's just over time, if the price doesn't do anything, which AT&T's been pretty flat over the last week or so, relatively flat, and we need it to go up. As buyers, we need the price to go up or down depending on whether we buy a call or a put. But if it stays relatively flat compared to our option, you just lose. You just lose it. It loses a little time and lose a little time. So you've got to guess right. You really got to guess correctly. So that's the update. Hopefully Disney's got to get back over 49 for us by Friday. Twitter's crushing our nuts. XRT, I don't know if you guys know anything about XRT, but basically it's a retail ETF. It kind of follows all of the retail stores in the S&P 500. And apparently Amazon had a retarded Cyber Monday and Black Friday, and everybody took that as a bad sign for retail stores. So it's going down, but hopefully there's a rebound there, and we can get our premiums for XRT. All right, I think that's gonna do it for the update. Oh, one more thing I wanted to show you guys for charting. So if we go to the 15-minute here, I want to show you where I got in on our put for Walgreens. So if you see this big candle here, so this is a candle. This candle represents 15 minutes of price action, and the body of it, like the wider part, is the volume, and the wicks at the bottom and top, those are called wicks, and that's going to represent the high and the low price for that 15-minute window. Okay, so this long red bar, and then we have a green bar in the middle, and then another long red bar. So this is what's known as the 3-bar play, right? You have an igniting candle, and then like a neutral candle in the middle or a rebound, and then another confirmation candle. So this is the 3-bar, and this one closed below. That's the confirmation. So that's where I got in right there. That's where I bought our put. And as you can see, it continued to go down. It's rallying now, which is good for our butterfly. But this is where I bought in on our put. But since we have a small account, we can't just unload it, even though we actually was up to like 24 bucks. Smaller accounts can't day trade. You only get 3 day trades before your account gets locked. So I thought about unloading it, but we'll let it ride for tomorrow and see. It's a really good hedge in case Walgreens goes lower. Anyway, 3-bar play, iron butterfly, iron condor, buying puts and calls and blah 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 blah. We're getting crushed. Let's do this thing. We need some money. Get me out of this hole. Anyway, till next time. Peace.